I doubled my trading account last year. Here's how I would learn to be a profitable trader in under 30 days if I had to start over. I've made just about every mistake in the book, losing me thousands of dollars. So let me save you some time and money. I'm going to identify a common trap that many traders fall into that will basically halt your progress, and also walk you through a downloadable framework that I've created specifically for you. But let's rewind to day 0. What should you be doing right now to become a successful trader as fast as possible? When I first started trading, I didn't understand how to read a chart, but this is a fundamental piece that you need to learn to be able to trade. Here is my 3-step method to speed up your time understanding charts. First, you need to find a charting platform to get set up. This will allow you to look at charts and start practicing what I'm going to teach you in a minute. There are a number of trading platforms that have all the bells and whistles, but the best one is TradingView. With a free TradingView account, you can practice demo trading, which is just trading with fake money. There's 2 ways you can go about trading, but there's only one way to be successful doing it. Larry is someone who is super excited at the potential money he can make from trading and wants to start trading right away because he can potentially make $500 every day right now. Steve, on the other hand, starts out demo trading because he wants to focus on building his skills and focus on the process and understand the markets because he knows there is also risk involved in trading, and because he's just learning, he's more likely to make mistakes, losing him money. A year goes by and Larry has stopped trading because he's lost all his money. He's blown it all because he tried to run before he could walk. He couldn't figure out how to consistently make money. But Steve, on the other hand, is consistently making money trading because he started focusing on the fundamentals and the process. What would actually make him successful as a trader? To be successful at trading, it's not really about how much you can earn. It's really about how little you can lose when you start out. Now, the next thing is to start soaking up as much information as possible, but make sure you are soaking up the right information. When I first started, I learned more complex markets and assets to trade because it seemed like the fancy or best way to go about trading. But really, they overcomplicated my trading. I held trades overnight and over the weekends and eventually realized that this added a ton of stress and I never got a break from trading. I eventually landed on something called futures because it worked for exactly what I wanted to do trading. What I learned, and a lot of people don't realize when they start out, is trading is extremely adjustable. Don't find one strategy that you think will make you profitable, but you have to bend over backwards with your schedule or how you want to trade to do it. Find something that fits you and your schedule. I've realized over the years that just learning to read the charts without indicators is what works for me. Using simple chart analysis really is the key. Honestly, there's a lot of people out there that say they have an indicator that will tell you exactly when to buy and when to sell. But what I've realized is that's never going to exist in trading. Or even with trading alert services, you are almost never profitable copying someone, even if they're profitable themselves. At the end of the day, you need to learn to read what the chart is telling you. Mastering things like support and resistance will drastically improve your trading. It's not glamorous or it doesn't seem fancy like those indicators, but support and resistance is what most successful and consistently profitable traders use. Let me show you a couple things that I have learned over the years that really is how support and resistance works, and it gives you a lot better understanding of what the market is doing. Take, for example, these swings right here. So this is kind of telling you that the market is rejecting this area. And so what that is you have to think of the market like supply and demand. When the market is moving down, that means there are more sellers than buyers because it's pushing the market down because more people just want to sell, get rid of whatever asset or market you're looking at, and people don't want to buy it. And then on the flip side, when the market goes up, more people are wanting to buy it. And so that's how support and resistance works. It's basically supply and demand. And so for instance, up here, how I like to look for resistance zones or levels is seeing that the market's rejected that area multiple times. And you can see it's one thing I've found that a lot of people do is they draw just a line that, you'd say, okay, the market's bounced bounced off of this exact price multiple times. And when the market then, comes back up and doesn't exactly touch it, they're not going to look for a potential sell off of that level, even though the market has told you before that it likes to reverse once it gets up here. And so a big thing I've realized over the years is use a zone, because you don't know exactly where the market is going to reverse off of when it's at a resistance level. And then the same thing on the flip side, looking for supports. You can see the market's kind of bounced down here multiple times. It eventually found an extreme low down here. And so I like to kind of use that as a support level. Is okay, here's the low of the support zone. And then, you can see the market kind of chopped in this area a bunch. And so that's a good area to look out for. And so as the market kind of goes forward, we come up to this resistance zone, and you can see it actually broke out of this box a little here. And that's totally okay, because again, treat it like a zone. And you can see here, it is respecting that zone in the end, and then it sells back off. And then on the flip side, once it comes back to down here, back into this support zone, we want to then look for buyers to come in and the demand to come back into the market and find some support there and eventually push the prices back higher. And so that's how you want to think about when you're looking at the market. Just think about the supply and demand. How is it moving between these levels? Eventually it'll, break one of these levels because there will be more supply or more demand in the market. But for me and for a lot of traders out there, this is the foundation of what makes a successful strategy. So once you have a good understanding of reading charts, it's time to start building a strategy you're going to stick with. To be successful at trading, it's all about creating a framework. This is something that many traders fail to create properly, so I have actually created one for you that you can follow. This is what you will use to start demo trading. You want your strategy to be very simple, because at the end of the day, if it's complicated and you have 15 things to do to get into a trade, you're just never going to get into a trade. And so looking at my strategy right here, it's pretty simple. The first thing in that is just having an overall goal for your strategy. What pattern or style of trading are you looking for? You want to have a simple strategy. To quickly walk you through my overall strategy, first off, you want to have an overall goal for your trading. What are you trying to accomplish every trading day? What patterns are you looking for consistently, so you don't see some random move in the market and FOMO into that, even though it's not a part of your plan? You want to have something you stick to consistently. So for me, I stick to taking reversal trades, and that's all I do. I don't look for continuations. When the market's in a massive bull trend, I just sit on the sidelines and don't do anything, because I know for me, I'm not good at those kind of trades. I have found way more success taking reversals in the futures market on a 1-minute chart and a 15-minute chart for my support and resistance levels. And so that's pretty simple overall of what my strategy is. And then, a good thing to have is a couple key trend rules. I think that one big thing I've really noticed is if there's a really strong trend in one direction, it's very unlikely to reverse very quickly. And as a reversal trader, you're trying to catch the bottoms and tops a lot of the time. And so that's something I found that really helps keep me away from trying to catch a falling knife, as they call it. Trying to catch that amazing reversal potential. Usually those don't actually work out. And so that's one thing that I have realized over the years, and I try and stay away from. And then the next big thing is you need a really good trade entry checklist, something that takes some of the emotion out of your trading and tries to streamline things for you. Because once it comes time to enter into a trade, emotions can come into play and you can get nervous, and having a checklist to say, okay, yeah, the market's done this, the market's done this, this, and this. I just have to get in and enter in and follow my strategy and hope that the process works out in the long run. That's what really helps. And so that's why I think having some kind of strategy checklist to be looking out for is really helpful. Now, again, you don't want this to be 15 different things, because you'll never get in the market. You want to be looking out for a few, and maybe 4 out of 5 of these things show up. That's totally okay as well, because again, the markets don't show up the exact same every time. They have infinite possibilities, and that's just how it is. You have to kind of take a leap of faith when you're getting into a trade. And then the last really important thing is your trade management. What are you risking per trade? How big your account is? What kind of risk reward are you going into? We'll go over that in a second. And then, how are you managing the trade? I have more of a fluid management style where I go for a more trailing stop, but that's that's something that you can figure out later as you are figuring out your strategy. So if you want to get a hold of this, I have created a fillable one with prompts for you. You can get down below in the description below this video. Now, when I first started out trading, I saw a lot of people talking about win rate and how they had a strategy with 90% win rate. You actually see this on YouTube a lot. And what I didn't realize is that to get this, they would have to have a really bad risk reward ratio. Look at this grid for a second. So this is an example of what that would look like. Let's say they have a 90% win rate and they're risking 4 to make 1. So that what that means is they're risking $400 to make $100 every win. And so you can see that over 10 trades, if you play that math out, you are netting $500. And so the math does work out in the end. But when it comes to trading, it's not just about the math. It's about the emotions. Your emotions come into trading a lot more than you think. And so for me, I tried this, and what ends up happening is it puts so much pressure on every trade to be a winner, because if we just add one more loss in here, you can see it quickly turns from making $500 to being break even. And then if you get into a bad emotional state and maybe go on a loss streak and just add one more loss, you start to really rack up a lot of losses, and you get in your head of, wow, I have to win 5 trades in a row just to get break even back from this loss now. And so that is something that really messes with your trading. And so I always think that having a unfavorable risk reward is a terrible way to trade and is going to never be consistently profitable. Some people might be able to make it work, but it doesn't work for most people. Now, going for something like a 1-to-1 risk reward ratio where you're risking $400 to make $400, that is way more favorable. Even with a 60% win rate of you only being correct 60% of the time, you are making really good, consistent money by the math playing out in your favor better, and the pressure is off of every individual trade. And so to push this even more, let's now move it to, I think, a really good risk reward ratio of what I think is more ideal is 1-to-3 risk reward ratio. And that's risking 1 to make 3. So in this case, we're risking $400 to make $1,200. You can lose most of the time, and then you can still see that you are still profitable, even with just a 40% win rate. And so if you then even, bump it down to a 30% win rate, you are still making money over the long run. And so that's really where risk reward ratio is very important when it comes to trading. Set yourself up for success. Yes, I think at a glance, sometimes people think it's not going to be fun losing a lot more than you're winning, but think of that pressure. A loss isn't that big of a deal. And so the loss isn't going to affect you that much. And then when you make a win, it scoops back a ton of those losses and then some a lot of the time. And so that is a really important way to think about risk reward in your trading. The sweet spot I found is either 1-to-3 risk reward ratio like this, or a 1-to-2 where you're risking, let's say, $400 to make $800. So I would suggest trying to find something in that ballpark, because again, that's where the math plays into your favor a lot more. By now, you should have your trading plan built and know how you want to start trading. The next phase may seem obvious, but there are a few crucial steps that you need to follow to not fall off the right path. And in the beginning, you may find that you want to do some tweaking to your strategy. You find something that doesn't fit or work how you wanted, and that's okay, but don't do it based on your result. You need to stick to something for about 20 or 30 trades before you make changes. Remember, trading is based around math. You won't win every trade. It's about winning over the long run. So maybe the first couple trades don't work out, but if you don't give things a chance to play out, you may not get to that win streak that's just around the corner. The pitfall many traders make during this phase is that they never get out of it. They take a few losses and try and change things. They think if they go back and learn another pattern or strategy or indicator or trick, and they can add that to their strategy, it will make things work out. But because there are basically infinite ways to trade the market, you're gonna be in a never-ending learning loop. Over time, you will be able to pinpoint what works and what doesn't, and make logical changes to improve your strategy versus making emotional changes based on the results of your trading. If there was one thing you need to do to be successful in trading, it's tracking your trades. It does take extra work, which can be annoying, but I would bet pretty much all my money on the correlation between journaling your trades and being a successful trader. Successful traders focus on, the process, not the results. There are a lot of journaling softwares out there, but the one I have found to be really good is TraderSync. It allows you to import your trades, which takes a ton of the legwork out of it from pretty much any different broker. You can add comments to the trades, and it even gives you data on things you might not even think about, like what day you're most profitable on. They've even started to integrate AI into the system, so it will be able to give you even more personal insights into your trading than before. Pretty much all journaling platforms aren't free, but I do have a link for a free trial for you to check out in the description. This will allow you to improve your trading whether you win or lose and become incrementally better over time. That's the whole key to trading, is slow, consistent gains. Now comes the real work that you didn't realize trading was going to take. When I first started trading, I thought that what made someone successful at trading was their strategy, but over time, I realized that is not the case. Once you've started to hone your strategy, demo trading, and you have found some consistent success, it's actually time to switch to real money. Do not start trading with as much money as you can. I cannot stress this enough. Even though you have had success with your strategy demo trading, this is a false confidence that is built up that loses a ton of beginning traders' money. Start with trading as little as possible, because once you change your real money, there's going to be an invisible switch that is flipped on. Suddenly, you won't have as much success as you had before, and it will be hard to realize why. Money is something that, whether you like it or not, rules our lives. It has so much control over you. This is probably the exact reason why you got into trading in the first place, to regain some of that control over your life with extra income. Now, think about all that emotional control that it has and realize that those emotions will be looking over your shoulder every trade you make. This is the invisible switch that is turned on when you switch from trading to fake money to real money. But remember, the success you had with demo trading should be a boost in confidence. You've proved that your strategy works and you can execute it properly. When you switch to real money now, you need to prove that you can consistently execute your strategy with those emotions over your shoulder. If you lose that confidence in your strategy, switch back to demo trading and reprove to yourself that the strategy works. Or reduce your trading size. You can always scale down the amount of money you're trading, but you cannot easily do that if you have already blown up your account because you started trading too much in the beginning. When you're trading real money, you need to start to become aware of how your emotions affect your trading. Start to add these into your journal. Add how you felt when you jumped into the trade. Were you chasing the trade? Did you jump out of the trade early based on fear? Starting to become aware of this on day one is going to drastically increase your learning curve. And so what I've done is I've created a specific playlist just for this video. This will, in order, teach you how to read charts, build a trading strategy, and conquer the mental side of trading. It has everything you need to know to get started on the road to becoming a consistently profitable trader.